Welcome. My name is Ivan Kirigan, and I'm about to dive deep into the world of venture capital investing in startups. And there's a million things I want to talk about here, about how the future is not inevitable, what the future even means, and how I think about markets and technology and startups and founders and how to execute, how to build, how to grow. But the immediate choice in front of me is exactly the configuration. I have three options, basically. I can do angel investing, I can join a VC fund, or I can raise my own VC fund. And so I want to talk through those three things now, and there'll be a lot of other videos about all the topics around venture and investing soon. So if I go into angel investing, this means I'm using my own money and putting it in startups. And this is great because I can make my own decisions and build close relationships with founders and go after whatever technology area I want. But it's limited in that, I don't have an infinite supply of money. So I could write a number of checks for a bit of time, but then I would run out. And that time horizon is really important because it actually takes 5-10 years to have an investment pay off. And so it's essentially limited. I also don't think the product is quite right in that if I could write, a few tens of thousands of dollars checks, that's not quite the same as these seed funds putting in millions of dollars now into young startups. And so I think that product better fits the close partnership that a young startup might need. And so the alternative is to join a VC fund. What a lot of founders don't seem to understand about VC funds is that they're partnerships. And they typically might build a relationship with one person, but there's a whole group of people at the fund. And how they work together is actually really important. And there's a lot of detail here, and I hope to dive into great depths into how partnership works. But you can imagine, let's say, like cliches about how it might work. Let's say there's 30 people, and you need a consensus decision among all of them. But we're talking about the distant future with predicting whether a startup's going to win. And so we don't know what's going to happen, right? And so maybe it's the people that bang the loudest on the table and have the most conviction, maybe without the data, and use sharp elbows and pull rank because they've been there longer and they have a bigger track record. And that could be a really aggressive environment. You could also imagine a group of truth seekers, people that like to counter each other's biases, and they use data when appropriate. They try to look at qualitative signals. They try to go deep into different markets and technology. They build the close rapport among each other so that they have the high trust to do this kind of truth seeking. And so there's another layer here, which is how you even assess this. So if I were to join a fund, how do I know how they make decisions internally? Because a lot of these things might be behind closed doors or only after some time you get to know people. So I actually don't think this process is going to be fast. I think it'll take a few months for me to understand where I would fit, where I would add something to a partnership, what I bring to the table. So I can angel invest, I can join a VC fund, or I can raise my own fund. And this brings up the topic of limited partners, LPs. LPs are people that put money into VC firms, and they're very diverse and different than the VCs you might be raising money from, because they might be a pension fund, or they might be an endowment, or like a university endowment, and they think on decades-long time horizons, and it might be a family office, so it's like a really small group, and all these are very different in the way they behave. And VC as an asset class is interesting in that the returns might be great, but actually the money gets locked up while the company is building. And so to return a fund might take 5-10 years or longer. And that's actually interesting compared to, say, I buy NASDAQ and I put the money in today, 10 minutes later I pull the money out. And that's very different as an asset class. And so I think the main point here is that I've had multiple startups and raised money a bunch of times. And so I think I understand at least what motivates VCs to make certain decisions, but I don't think I understand LPs yet. And I expect this to take a lot of time if I were to raise a fund, because to build the relationship might take 12 to 18 months to raise even a small fund. And so there's another long time horizon here. So my options are join a fund, raise a fund, or do angel investing. And I think I'll start that right away because it's a good idea to build a track record and build relationships. So that's the day-to-day job that I look forward to. But there's another side to this, which is why I'm recording this video. It seems like this world is very rarefied, but people don't know this. It feels like the world of startups, like before Y Combinator. So now today, there's a lot of content out there for how to start a startup, how to grow, how to do sales, how to hire, all the tactical things of running a startup. But in terms of how partnerships form, how they make decisions, a lot of firms are really closed about this. And so even my trying to figure out how to get into venture capital is really closed. So there's a track where you start at the bottom as an associate, but even that will not, you'll have like this awkward teen years where you can't break in to be a general partner. And so I want to open this up. So as I learn to make these decisions, I'll make this content, I'll write on my blog, and hope to teach everyone else, which is where you get involved. So I could use your help. If you can ask me questions and add comments and share this, then whatever questions anybody has, I can start exploring, and I can start attacking the problem from different angles. And so I can put out more content about this. I'll definitely deep dive into partnerships. I'll definitely try to understand LPs a lot better. And there's a million other parts to this in terms of how to think about it. And like I said, it's gonna take some time. And so I'm not in a rush. So what you could do, subscribe, comment, share this out there. And then we could together kind of open up and open source this kind of closed door world of how VC works. I also want to give a shout out to the folks at YouTube, and I mean specifically the content that I've grown to love. So Eric Weinstein has a new podcast, The Portal. It's wonderful. It's similar to Joe Rogan and Sam Harris and Dave Rubin and all these guys going out there doing great content. And even in the world of startups, you have folks like Y Combinator doing startup school and having all this great content for founders to learn how to run their business, starting from scratch. And I think it's really awesome and it's very inspiring for me. More recently, you have Garry Tan at Initialize starting a vlog. And I just think the content's great, so I want to do more of it. So thanks to y'all for this great content. And I hope to see you soon again.